Ticker symbol O, the monthly paying dividend stock, Realty Income Corporation, is one of my favorite stocks and one of my single largest holdings across my 7-figure dividend portfolio. So much so to the point to where, as of right now filming this video, I'm currently holding on to 2,848 shares of Realty Income, which currently pays me upwards of $700 to $800 every single month in dividends. But in this video, we're going to dig a little bit deeper into Realty Income, and I want to dive into what Realty Income really is and what this REIT really has to offer in detail. So if you currently own any shares of ticker symbol O or have ever plan on doing so, make sure to stick around, drop a like down below, and let's get right into it. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So what I mean by digging a little bit deeper into ticker symbol O Realty Income is to look a little bit closer on what actually makes up this REIT, because now with over 15,450 commercial properties, which are leased to over 1,300 different clients, this REIT has become much bigger. And because of this, I'm almost sure some investors don't even know what really makes up Realty Income at this point. Now, digging into Realty Income's portfolio, which is very diversified, and this is one of the main reasons I love owning so many shares of Realty Income. If Realty Income only leased out to maybe 5, 10, 15 different clients, there would of course be a lot more exposure into each client, and as an investor that loves diversification, I love nothing more than the fact that Realty Income has so many different commercial properties in different sectors leased out to so many different tenants. And this is one of the main reasons for me personally as an investor, which definitely could purchase real estate on my own outside of the stock market. I'm talking about physical real estate. And side note, I do actually own some real estate outside the stock market, not just REITs. But the fact that I can get exposure to some of the highest quality commercial tenants and have so much exposure and so much diversification just with a simple click of the button, it makes it really hard to want to invest a single dollar into real estate other than Realty Income at this point. Now, I totally understand that physical real estate has different things to offer that investing into REITs might not offer, but I'm just saying for me personally, that's the way that I see it. Now, Realty Income's top 10 industries, this is presented as a percentage, and this is going to be a crucial part of whether or not you want to invest in something like Realty Income. Knowing what you're actually buying is very important, and some of you might laugh, but trust me, a lot of investors don't even know exactly what Realty Income owns. So Realty Income's portfolio is made up of a majority of grocery stores, convenience stores, dollar stores, and then a little bit less of things like home improvement, drugstores. We have restaurants, quick service restaurants, casual dining, and then a smaller portion of that, automotive service, health and fitness, and a really tiny portion of gaming, which of course is the casinos and everything else. Now, this is going to be very important, especially as you build out a larger and larger position in Realty Income. Now that I personally own several thousand shares of Realty Income, and trust me, by no means do I think I'm the largest shareholder of Realty Income across the world. I know that it's all relative, but for me personally, in my overall portfolio, Realty Income makes up a large portion of it now. So as I bought more and more Realty Income over the years, I thought it was more and more important to make sure that I'm aligned with the exposure that Realty Income has to offer. Now, what I mean by that is that I personally would love to have exposure to super high quality commercial grocery stores. The commercial real estate I have exposure to is somewhat, if not 100% recession proof. Meaning that no matter what happens in the economy, let's say the economy has 3 years of complete destruction and things get bad. Realty Income's exposure in grocery stores, convenience stores, dollar stores, just those 3 alone, which make up around 25% of the overall holdings, not to mention things like drugstores, home improvement, also I think would survive throughout a recession. But of course, I don't only want to invest into something just because it's going to survive in a recession. I want to invest into a stock or a REIT in this case because I want exposure to the underlying holdings. Now, it's sort of weird talking about it like this because Realty Income, of course, is a single stock. It's a REIT. It's a real estate investment trust. But within Realty Income, there's so much exposure to so many different areas. So the way that I personally think about it is I ask myself, do I want exposure to grocery stores, convenience stores, etc.? And the only thing that I can say in this group that I'm not necessarily thrilled about and I'm sort of unsure of, I don't necessarily know if I do or don't want exposure to, is this right here. It's the 3.9% of gaming. Now, I don't have anything against having exposure to gaming. I personally own quite a bit of Vici in my portfolio as well, but overall, compared to the other industries, I'd much rather have gaming be the lowest amount than something, say, like grocery stores, etc. Now, so far, the top 10 industries, as far as what I can see, it looks absolutely amazing. Convenience stores and grocery stores are the majority, and then everything else is basically pretty even. But the next thing that's very important to know and to understand when it comes to buying into Realty Income and to sharing what the Realty Income has to offer, the client diversification. So Realty Income, as you saw, has over 1,300 or so different clients. So these top 20 are not every single client Realty Income has, but this is just the top 20, meaning that Realty Income does have some greater exposure to these names. Now, what I personally look at is basically the same thing we did last time. Look at these names here and ask myself, do I want mega exposure to these names? Now, of course, some of these names are a little bit less, some a little bit more. And like I said, just because these are the top 20 doesn't mean that Realty Income isn't ultra diversified, because Realty Income has tons and tons of clients. Now, through this entire list, let's go through and I'm going to tell you guys, just in my opinion, just generally speaking, if I want exposure to it or if I don't. So Dollar General, 3.8%, I would say yes. I would love to have exposure to Dollar General, once again, because it's recession proof, etc., etc. Walgreens, I'm sort of unsure on. Walgreens, honestly, I'd probably be more so to a no. Now, I don't hate having exposure to Walgreens. I don't think Walgreens is really going to grow from here on out, but there probably will be Walgreens for a while, so I'm honestly not super mad about it. Dollar Tree, I love having exposure to Dollar Tree. 7-Eleven, I love it. EJ Group Limited, not bad at all. Wynn Resorts, like I said, not necessarily sure on if I do or if I don't, so sort of neutral here. FedEx is great, B&Q is great, Asada is fine, Sainsbury is fine, LA Fitness I love, BJ's I love, Lifetime Fitness is great, Bellagio, MGM, same thing as Wynn, the pharmacy is great, Walmart's great, Tractor Supply is great, and then the rest, Tesco, AMC Theaters, and Red Lobster, basically indifferent or neutral in. Now, I think it's really important that if you currently own shares of Realty Income, go through this list yourself and sort of ask yourself if you want exposure or if you don't want exposure to the top 20 clients, because that might be a good reason to say buy more shares or maybe sell some shares. But for me personally, we just went through and for the most part, let's say 90+% of every single of the top 20 clients. I absolutely love these clients and I love having exposure to every single one of them, more or less. Now, the last thing to go through as far as digging into Realty Income and the portfolio, property type diversification. This is another major reason on why I went so heavy in Realty Income and why I think maybe in 2022, I started buying shares of Realty Income by the hundreds. Now, this is because for me personally, once again, everyone has their own ideas, everyone has their own strategies. For me personally, I wanted to have major exposure to high quality commercial real estate because I do believe in it long term. I love the fact that they're triple net assets and I love the cash flow. But with that, there's lots of different commercial real estate. There's things like office buildings. There's, of course, retail. There's even industrial or gaming. Now, with Realty Income's diversification, you see that basically 82% of everything is retail, 12.7% is industrial, and then the rest is a tiny portion of gaming and other. I'm a big fan of industrial real estate. Stake Industrial is a holding in my portfolio, but I'm a way bigger fan of retail, which is why I'm so heavily invested in Realty Income. There's different stocks, there's different REITs out there that offer a large exposure into things like industrial or even gaming, or even things like office or residential real estate. But for me personally, I'm looking to have a large amount of exposure to retail, commercial, which is why for me personally, Realty Income is the perfect REIT for me. Now, this is of course because I personally am very bullish on high quality retail commercial real estate. And like I said, I think the majority of these top 20 clients, just to name a few, will be around a lot longer than I am. So that's a quick little overview of Realty Income's portfolio, what things look like currently, some of the top clients, and the fact that Realty Income is heavily invested into retail commercial real estate. Over time, throughout different climates in the economy, Realty Income has proved time and time again to be strong, and I think it will continue to do so for a while. But lastly, I want to hear from you guys down below. Do you currently own any shares of ticker symbol below? And if so, how many shares do you have as of right now? If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.